Coronavirus cases on the rise, and the FDIC considers relaxing the Volcker Rule. This is the Seville Reports Weekly Review, where we take a look at the headlines that move the markets during the week and all things investment related. On Monday, the market started the week on a positive note. The Dow closed up 153 points, the S&P 500 closed up 20 points, and the Nasdaq closed up 110 points. In news that moved the markets, existing home sales fell 9.7% in May compared with April, and were down 26.6% from May of 2019. Apple held its virtual developer conference and confirmed the rumors that came out weeks ago that it will create its own chip for its Mac products, ending its relationship with Intel. Intel was up slightly on the day. In a story loosely related to Apple, Citron put a favorable research report out on Sonos, causing that stock to jump 17% during trading hours. Citron predicts that Apple will acquire the speaker maker. And Virgin Galactic stock jumped 15% after striking a deal with NASA to train and outfit future space travelers in a bid to boost space tourism. On Tuesday, the markets continued to run up. The Dow closed up 131 points, the S&P 500 closed up 13 points, and the Nasdaq closed up 74 points. The Nasdaq registered new highs on the day, as did Apple, Netflix, Amazon, and Facebook. Things weren't looking good for the markets on Monday evening when futures declined after White House trade advisor Peter Navarro stated during a Fox News interview that the trade deal with China was over. He later walked back the comments. In the fight against COVID-19, French drug maker Sanofi stated it anticipates receiving approval for its potential COVID-19 vaccine in the first half of 2021. And American Airlines announced that they expect to raise $2 billion through a stock and notes offering. The company plans to offer 74.1 million shares at $13.50 per share. On Wednesday, markets were rocked by the rising number of coronavirus cases within some states. The Dow closed down 710 points, the S&P 500 closed down 80 points, and the Nasdaq closed down 222 points. California and Florida reported record high one-day totals, with California reporting 7,100 cases and Florida reporting 5,500 cases. Also, Arizona reported 1,700 cases on Wednesday. In an effort to keep New York's numbers low, New York Governor Andrew Cuomo announced that travelers to New York, New Jersey, and Connecticut coming from COVID-19 hot zones would be subject to a 14-day quarantine. Bloomberg reported that the U.S. is considering tariffs on $3.1 billion of EU and UK products, including gin, that sucks for us, olives, and trucks. In other news, in an effort to shore up its balance sheet, Softbank sold its T-Mobile stake at $103 per share, a 4% discount from Tuesday's closing price for T-Mobile. The move raised around $15 billion for Softbank. On Thursday, the markets continued Wednesday's sell-off early in the day, but rallied in the last hour of the day. The Dow closed up 299 points, the S&P 500 closed up 33 points, and the Nasdaq closed up 107 points. The markets were shaky on news that Texas was pausing its reopening process due to a renewed surge in COVID-19 cases. In addition to the news out of Texas, 1.4 million people filed for unemployment benefits last week. Economists were expecting 1.3 million for the week. This week's 1.4 million unemployment claim marks the 14th straight week of claims above 1 million applicants. Markets and bank stocks rose on news that the FDIC plans to loosen the restrictions imposed by the Volcker Rule to help banks free up billions of dollars in capital. The Volcker Rule was put in place after the financial crisis and limited the types of investment banks could make. I'm sure this won't end well. In earnings news, Nike reported a big EPS miss by 54 cents and a revenue miss by $950 million. Revenue decreased 38% year over year due to the store closures during the global lockdown. On Friday, markets sold off big to end the week. The Dow was down 730 points, the S&P 500 closed down 74 points, and the Nasdaq closed down 259 points. The U.S. reported a record 37,000 infections on Thursday, led by Florida, Texas, California, and Arizona, surpassing the 36,188 number from April. The increase in numbers caused Florida, along with Texas, to roll back some of their reopening plans, which is expected to cause a delay in the economic recovery. In May, the U.S. saw consumer spending climb to 8.2%, but it's unlikely the economy will keep that upward momentum. In other news, Amazon announced that it's getting into the autonomous car business by purchasing the self-driving car company Zoox for more than $1 billion, and Gap shares jumped on news that Kanye West's Yeezy clothing line will be sold at the Gap. And after mounting financial pressure from companies pulling their advertisements from Facebook, the company has made an adjustment to their policy. It'll continue to allow politicians and public figures to disseminate hate speech, but Facebook will now flag political hate speech. Overall, the Dow, S&P 500, and Nasdaq closed down on the week. In crypto news, not much movement in the four major cryptocurrencies that we follow. Bitcoin closed out our week at $9,150, down 1.9% from last week. Ethereum was relatively flat on the week and closed the week out at $229.27. Litecoin also relatively flat on the week and ended the week at $43.06, and Ripple ended our week at 18 cents with no movement from last week. Crude oil was down 3.7% from last week and closed out our week at $38.16 per barrel. A big winner for the week was Fastly, FSLY. This stock has been on a tear since the late March market rally, but hasn't got much attention. The stock was up 39% this week. A big loser for the week was Unicure, QURE, which dropped 30% on the week after licensing the commercialization of its gene therapy program. That's a wrap for this week's market review. If you want to dig deeper into the headlines we covered, the links to the stories are in the description below. A link to sign up to our weekend article in Focus is also in the description below. And if you're ready to get serious about investing and creating wealth for yourself and your family, check out our latest quarterly newsletter, The Seville Report. Serious investment ideas presented in a way that experienced and novice investors can understand. If you're ready to master the markets, check out our newsletter at SevilleReport.com. Thanks again for checking out the Seville Report's market review. This channel is dedicated to anyone who wants to start investing but doesn't know how or where to start. If you have any questions, ask in the comment section, like and subscribe, and may your next investment be your best investment. See you next week.